What's up, YouTube? Today is Wednesday. Really important day today. I learned something really interesting new today. I basically had a market maker sell model on regular trading hours spotted before. But yeah, we'll make a quick recap of today's trading day. As you can see right here on the daily chart, we are now finally getting a more explosive or trending day to the downside. So because Monday and Tuesday were more difficult to trade, only small bodies with huge wicks, but today we finally expanded lower after taking out previous days buy sell liquidity. So that's basically for today's daily chart. So let's drop to a 1 hour chart. What you can see right here is also like still the market maker sell model, which is in play right here. So basically from there I still have my quadrants, but actually I think I will also remove them. So what we can see right here is that we had the high resistance day yesterday. So we have a balanced price range actually right here. The quadrants right here is basically of the daily wick, and we traded higher and traded into the 1 hour fair gap right here, bearish fair gap, scrapped buy sell liquidity right here and also right here, and then basically sold off and also swept now daily sell liquidity. So let's drop to a 50-minute chart. Right here it's getting more interesting. What we can see right here, we have Asia lows, London lows, New York open kill zone lows, and we did not take out the New York open kill zone buy sell liquidity. That's really important and really interesting, so we don't have to expect that. Why? Because due to regular trading hours. I was already mentioning the market maker sell model, which occurred right here, and that's really beautiful to see. So what we got is basically we have still the high right here and opened right here on Monday, and from there on we just traded lower. And also on Tuesday we could not we could not take out the high right here, and we created relative equal high. So that's definitely really important buy sell liquidity. And we also had the contract switch for Tuesday. Therefore the high resistance delivery was actually to be expected. Nevertheless, today we traded higher before the opening, and from there on we already traded lower. So within basically before the opening we already traded lower. I think that's actually before before Wednesday. So that's occurred basically on Tuesday, but then with 9:30 opening we opened right here and then traded higher. We took out the previous day high basically, and then from there on we sold off. And that's really important to see, and really interesting also to see. Why? Because we have now basically a regular trading hours market maker sell model where we took out relative equal highs and also scrapped or had basically a short-term run and stop. So that's manipulation higher with the opening, and then we just traded lower, and therefore we don't have to take out the New York open kill zone buy sell liquidity, because already with the 9:30 opening, with trading basically higher right here with the wick right here, we already have our market maker sell model on the regular trading hours chart, and therefore our opening occurred I don't know, appeared very aggressively to the downside. So therefore we could have expected a sell-off to appear basically. But let's go now back to regular trading hours. So what's also really interesting is the fact that we have a new opening range gap of 78 handles. So therefore we are actually expecting NQ to trade back to consequent encroachment. But what did we do? Because we have a market maker sell model and we have also trending bearish conditions, we completely traded through the gap and then traded back to the low of the new opening range gap. And that's also really nice to see if we expect a expansion further to the downside, because the low of the new opening range gap is basically delivering resistance. So we cannot trade back into the range, we are staying below it. And also, as you can see right here, the 5-minute wicks are basically trend line liquidity, so therefore that's only time distortion before we can deliver to the downside with 1030. And what are we basically targeting? We are targeting the sell liquidity right here, and also the fact that we did not trade back to the consequent encroachment level and also the lower quadrant of the gap, so we can still basically fill in the inefficiency right here and also target previous day low and even lower quadrants, for example the consequent encroachment of a previous new opening range gap. But that's pretty or quite optimistic. Still, really clean delivery. Also the fact that we traded perfectly to the lower quadrant right here, reacted off it, traded to the upper quadrant or the low of the new opening range gap and traded lower. So that's just really nice to see. I think I will remove this one right here. It's a bit annoying. And so really clean. And also something I learned new, that we can have a market maker sell model being in play on regular trading hours already. And therefore we can basically understand the conditions on electronic trading hours way better, and also understand that right here we are definitely not done for today with trading lower, that basically our expansion will still unfold to the downside, because also our higher time frames, so our daily chart, our hourly chart, are very bearish as well. So that's really important in that case, that we are trading a line, a market maker sell model on the higher time frame, and then basically trade a market maker sell model right here on the lower time frame. And therefore we are trading a line with the higher time frame and with regular trading hours, and that's the perfect trade we want to take. So let's go to a 1-minute chart on NQ, and I will basically show you my trade today. So, but first I show you my executions. I just want to show you basically the idea I had in mind today. So right here we traded higher, and I already knew that I want basically look for shorts. Why? Because I was still expecting that we would trade lower, basically to the quadrants of the daily wick right here, which you can see also on the hourly chart right here. And also I wanted to see expansion lower, because we also have Wednesday today, and yesterday and Monday delivered really slow, and therefore I expected a expansion on the daily chart as well. So therefore I was pretty sure that we were still not done with sweeping even Asia sell liquidity, and I was definitely looking for consequent encroachment right here of the daily quadrants, and also the lower quadrant of the daily wick. So that was basically what I was looking for. So therefore I waited for a retracement, I waited for a buy sell liquidity sweep, and also wanted to see that we trade back to consequent encroachment of the price range, so back into a premium. Why do I only take the price range of the high from the 930 opening and not the high right here? Because the market maker sell model on regular trading hours is already in play with the 930 opening high and not with the high right here. So therefore this high right here is way more important, and therefore I take the range basically right here, and there we traded above consequent encroachment. And within our 10 AM macro we created a SMT, so that's basically now our sign for a smart money reversal. And we also had CSD after we inverse basically the bullish favor gap right here, so that's now inversion favor gap. And there is basically where I wanted to take shorts and targeting lower lower prices, the daily consequent encroachment right here, and also the lower quadrant, which is basically perfect aligned with the high time frame gaps right here as well. And also what I was measuring as well is the Fibonacci extensions of the today's price range. So basically the high and the low, which formed between 9:30 and 10 AM. That's our price range. And from there on, I measured also the Fibonacci extension tools, and there we have minus 0.5 and also minus 0.75 and also minus 1, which got actually traded to perfectly. So also some targets we can yeah, basically target. So let's take a look at my executions. Yeah, so it looks very messy, and basically to just, yeah, in a nutshell, basically to conclude it, my mistake today was that I had a definitely, yeah, way too tight stop loss. So because we already swept Asia liquidity right here, and we are definitely in high resistance in a event horizon event horizon as well, because we are trading within or basically especially in between higher time frame gaps. So therefore we are right here in high resistance, support coming from the higher time frame gap right here, and resistance coming from the higher time frame gaps right here. So we are trading between it in high resistance. Therefore, I got definitely stopped, yeah, quite often. And yeah, the lesson from today is basically, if you trade a smart money reversal, the how you call it, basically the invalidation point, that's the right right term. The invalidation point is above your swing high of the SMT. So therefore your stop has to be above the swing high. And then this could have been basically a perfect short opportunity. Still I got, yeah, stopped quite often. Also took one long in here, which is definitely the wrong approach, I have to admit, but I was, yeah, aware of that, and then still try to basically be part of the yeah, expansion to the downside. But right here with 1022, I got stopped right here and entered right here. Again, short. Why? Because that's basically our 1030 manipulation. So therefore I was really convinced that we will now see a distribution distribution to the downside with 1030, and that's basically was what appeared right here. So I shorted right here, and finally was able to participate in the move to the downside. So my first partial right here, after basically sweeping the low of the up close candle right here, approximately to the consequent encroachment level. I took my other contract off right here, and my last partial was stopped right here. So I was aiming for the minus 0.75 level, and yeah, still I'm really content with the trade. So and it's also like amazing to see the fact that we distribute with the 1030. So we had 1030 manipulation, then 1030 distribution, so, and also like 1030 consolidation. So that's really perfect. And we also traded lower, but I'm content with being part of the move right here. Really low resistance delivery. And it's just that I have to keep my stop above the swing high. Then this could have been a extreme bullish winning, not bullish, big winning day. But it is still, because yeah, the win was still much bigger than my previous losses right here. So I got stopped 1, 2, 3, 4, 5, 6 times, and then had only one winning trade, and I'm still up on the day. I think 100. What was it, $68. So right here, and now back at 3,300. So yeah, definitely was able to mitigate basically Monday's loss. That's really amazing to me. I'm not really sure how we'll continue trading this week. Maybe I will just be done for the week and also take only a really small loss. I think minus $90 on the week. But we will see how the next days will deliver. I will try to take only quality setups. I have to take only quality setups, definitely. And yeah, I think that's basically it. So really important lesson today. especially for risk management, and also regarding the regular trading hours chart. So really interesting, and I'm a bit proud that I was actually able to participate in the expansion to the downside, because I was really aware of the fact that we are not done trading lower. So that's definitely a step forward. But also, like, today showed me that I still have to learn a lot. I think you will never be you have never learned enough, so we will always continue with learning. So trading is basically learning as well. I don't know how to call it, how to explain it. It's been a long day actually, so yeah, just will call it a day right here, and see you soon.